Britain's economy is bouncing back, but the austerity isn't over. That's the message we're expecting from Chancellor George Osborne as he delivers his autumn statement. Plus, waging war on fast food giants, restaurant workers plan a wave of pay strikes across the US. Hello and welcome you with World Business Report. I'm Sally Bundock. Also in the programme, we're going to talk about Qantas because shares are diving in the company. It announced a profits warning and a lot of job cuts. But first, we start in the UK, where Chancellor George Osborne delivers his autumn budget statement to Parliament in a few hours. Now, Britain's economy has made an unexpectedly strong return to growth this year after a long period of stagnation, and he is expected to say that it will grow by 2.5% or more next year. Now, that would make it one of the best performing developed economies. However, it is one of the most indebted as well, with a national debt of £1.2 trillion. It costs tens of billions in interest every year to service that debt. So the austerity will continue, with new government cuts of £1 billion a year for the next 3 years, according to a leaked report, and a steady rise in the retirement age, so that Britons who are now 18 years old may not get a state pension until they are 70. Now, with an election looming in 2015, there are expected to be some tax breaks and handouts, particularly help with energy bills. Well, as you can see, I've got Sarah Hewen here, Head of European Research at Standard Chartered. Good morning, Sarah. So, everybody will be digesting what he has to say and picking it apart later today. What do you think he'll be saying?
I think that he's going to be emphasising the economic recovery, emphasising the good news, but at the same time he doesn't want people to expect too much too soon. Of course, as you said, there's an election coming up, there's still another budget to come before that, and I think that what he's going to want to do this time round is make sure that business confidence is strong, business confidence holds up, and that businesses in the private sector can counteract some of the cuts that are going to be taking place in the public sector.
Has he got it right? Anyone looking at the state of our economy now would say perhaps yes, because it is in the state that it's in right now. Plan A seemingly worked. They announced infrastructure spending as well this week. That's a lot of investment. Do you think we're on the right path at the moment? And with an election in 2015, obviously things will be steered to win votes?
Well, I think if you look at the economic recovery, then it does appear to be reasonably broad-based. Of course, there is quite a lot of support from the housing sector, and that's where some policymakers are somewhat worried that house prices are rising in parts of the country too quickly, and that this recovery to a certain extent is based on housing. Now, we don't want to go through another boom and bust, and I think this is why the Chancellor is going to be emphasising businesses and the need for investment to really pick up between now and the election.
How healthy is the recovery from your point of view? Clearly we're looking at, or they're talking about 2.5% growth in the near future, which is a good number. Interest rates could be going up soon. How healthy is the economy as a whole? We hear still about lots of people at the poverty end of the scale having a very difficult time.
I think that certainly in terms of growth, the economy's looking in pretty good shape. But of course, we have been through a very prolonged downturn and period of economic weakness. So you would anticipate that an economy anyway would bounce back after that. And there are certainly some pockets of the economy that still look very vulnerable. In fact, wages have fallen in real terms over the last few years. So many people are still finding it very difficult. Some people just don't have enough to make ends meet. Overall, though, I think that the outlook is probably improving. the Bank of England will be very cautious not to raise interest rates too soon, because of course that could cut short the recovery, and it raises all sorts of issues about households that are very indebted and mortgages that are particularly high at the moment.
All right, Sarah, thank you very much indeed for your time. And of course, there'll be a lot of information for you on the BBC website and on BBC News and television and radio as that autumn statement kicks off today. But let's now move on, because they're calling it the fight for 15. US workers in the fast food industry are planning a wave of strikes today, demanding pay of $15 an hour, a day after the president called the growing gap between the rich and poor the defining challenge of our time. Low-paid employees from chains like McDonald's, Wendy's and Taco Bell are expected to walk off the job in 100 cities around the country. From New York, Michelle Fleury reports.
America's stock market is booming. Corporate profits are up. But although the economy may be improving, the gains haven't been shared equally. 31-year-old Morris Royal earns $7.25 an hour, working at Burger King. Not enough, he says, to be able to afford anywhere to live.
I'm in a shelter right now. So I'm in a shelter. I've been in shelter for about a month now. Struggling, trying to get special assistance with food stamps and stuff like that.
And his frustration is shared by many. The fast food strikes that started in New York over a year ago are expected to spread to 100 cities this Thursday. They're calling for $15 an hour, more than double the national minimum wage. And they want the right to form a union. But advocates for the restaurant industry question who will pay for these wage increases.
The model of the fast food industry was to provide a lot of jobs for people just starting out at a low wage. What it's not designed to do is provide long-term employment for many people over a long period of time. If we change that business model, it'll be very difficult for restaurants to stay open and provide the employment that's become so important to a large swath of the population.
The growing gap between the rich and poor hasn't escaped the attention of the White House. President Obama describing it as the defining challenge of our time.
Combined trends of increased inequality and decreasing mobility pose a fundamental threat to the American dream, our way of life, and what we stand for around the globe.
The timing of such remarks is likely to draw more attention to the protests. Fast food jobs represent a growing part of the economy, so the challenge of making ends meet on a low wage is really beginning to hit home. And that's why the protests that started here in New York are finding a wider audience. Michelle Fleury, BBC News, New York.
Now, shares in Qantas slumped to an 18-month low this morning after the Australian airline warned of big losses and announced 1,000 job cuts. Qantas said a marked deterioration in trading conditions means it's on track to lose some $270 million in the current half of the year. It's struggling with fierce competition from rival Virgin Australia. Let's join Puneet Singh, who's at our Asia Business Hub in Singapore for us today, who's following this for us. Puneet, tell us a bit more about the challenges Qantas is facing and why it's had to go down this road of cutting jobs yet again.
Well, Sally, they've been struggling for some time now, and as you mentioned, increased competition has been a key factor. Meanwhile, higher fuel costs and a subdued travel demand all over the world has seen its international operations make losses for some time. That's been a big drag on its overall profitability. Now, at the same time, earnings at Qantas's domestic operations have also shrunk in recent months, making life a little bit more difficult for the carrier. And if you break down the numbers Qantas has put out today, translates into a loss of about $1.5 million per day. And investors, Sally, clearly not happy with that warning.
OK, thanks very much indeed, Puneet. A quick look there at Qantas, and of course we'll look at the shares in a moment trading in Australia. Just to mention as well, Apple has struck a deal with China Mobile to offer the iPhone on its network. That's according to reports in the Wall Street Journal. The news comes after China Mobile and its rivals were issued with 4G licenses. China Mobile is the world's largest operator of user numbers with some 700 million subscribers. It's also one of the last in the world that does not offer the iPhone at the moment. So as Puneet mentioned, the big story in Australia is Qantas. Its shares dropping by something like 15% by midday. In Australia today, you can see the market there down by almost 1.5%. Japan also losing quite a bit of ground, down by 1.6%. Another big loser today is Standard Chartered. It has issued a profits warning as well. Its shares slumping in Hong Kong. And if we just quickly show you how things are going in the United States, I say going, of course that day's well and truly ended, but if you missed the close in the US, you can see there a mixed close. That's all from me for the time being. I'll return in a few minutes to review the papers. We'll see you then.